Well, Jonathan Garner is now joining us, Chief Asia and EM Equity Strategist at Morgan Stanley. Jonathan, good to have you with us here. Thanks for waiting. Prashant this side. Are Asian markets in a bull market, Jonathan? I mean, that question seems a little weird after the kind of year that we had last year, but this is an incredible year so far. The Nasdaq is up 30%. The S&P is doing what it is doing, and here in Asia, many markets are up 20-25% from their last year lows. Go on.
Yes, we called a new bull market in Asia early last October, and we thought, as with previous bull markets, it would be led by North Asia. And broadly speaking, that's what we've seen. So Japan, Korea, and Taiwan have all performed very well, China less so. The Indian market was actually relatively slow to get going this year, but is now actually performing well. So yes, we did reach a trough in valuations last October, and also a peak in ex-ante US real rates. And the global economy, despite many cross currents, is actually performing reasonably well still at the moment.
Jonathan, morning. In March this year, Morgan Stanley upgraded India's weighting to an equal weight as the relative valuations improved. In October of last year, India was very expensive. In March of this year, the valuations were reasonable. That's when you decided to go ahead and upgrade India to a neutral or an equal weight rating. But since then, the Indian markets have seen a rally of nearly 10% on the index and far more when it comes to the mid and the small cap indices and the stocks. So are you comfortable with India's valuation right now, or is there a risk of a valuation-led downgrade given the recent run-up?
So if you go back again to last October, when we were calling at the beginning of a new bull market, India at that point was all-time expensive to North Asia. So trading about 2.2 times on a forward PE, the overall emerging markets or Asia ex-Japan index, and that was extremely rich. And so India did underperform early on in the rally, but a lot of that valuation excess had corrected by the time we got to March, so only about a 1.6 times forward PE premium then. Now that is high compared to history, but do bear in mind that India's ability to generate earnings versus other emerging markets has steadily improved over the years. So paying about a 1.6 times forward PE premium is reasonable. And India has now participated in the rally. It's certainly not leading the rally. The leading market in Asia this year has been Japan, and Japan FX hedged has been our top pick in the region this year.
Hi, Jonathan. Good morning. Nigel on this side. Jonathan, have you factored in, Korea being reclassified as a DM? We had a couple of notes that came in last week, and it appears that at some point of time that could happen. Have you factored in? If yes, when? And what could the potential impact be on the other emerging markets like India?
Yes, I think you may be referring to competitor notes. On our team, we have not been expecting Korea to be upgraded to DM status, anytime soon. So we don't think that this is an imminent change for Korea, and therefore it's unlikely to have much effect on the overall emerging market index.
Got it. Jonathan, so what happens from here for the rest of the year? What's the call for markets like India and other markets in Asia? Will this run continue?
Well, clearly we've seen over the weekend that geopolitical risks remain elevated, the situation in Russia and Ukraine. We also continue to have upward pressure on US interest rates at the short end of the curve, which needs to be monitored. And again, I just caught your introduction to this interview. We did have corrective price action last week in quite a few markets. We're heading to the Northern Hemisphere summer, which typically, after a year like we've had, a very strong year, does cause some profit taking through July and August. And then we'll just see where we get to in early September, which then tends to set the trend for the remainder of the year. But the overarching point remains that the broad Asia ex-Japan emerging markets universe was exceptionally cheap late last year on fears of an imminent tumble into global recession, and that simply hasn't happened this year.
No, so, Jonathan, are we starting, in your opinion, I mean, so July and August, maybe there is some pullback, but are we starting is it possible that we perhaps will start a global upcycle, or you think that's unlikely? Upcycle equivalent to kind of a bull market, global bull market, or you think that's extremely unlikely?
Well, again, I caught, the show just before coming on, and you were right to highlight the leadership in the S&P 500 has come from a relatively narrow group of stocks. but that's about the appearance of a new investment thematic, which is generative AI. And that has an enormous impact on parts of the Taiwan, Korea, and Japan markets. So at least from that perspective, in terms of a new investment theme that's captured investors' imaginations, we are in a new bull market.
Jonathan, just talking about the near term, this heavy bout of profit taking that we saw towards the end of last week, is this possibly going to lead to a deeper correction in July and August? How do things play out just in the near term?
Well, from a purely technical perspective, some markets, some segments of the market are overbought. But again, everything really hinges on the ability of the global economy as a whole, and particularly the leading parts of it, which is US, Europe, China, and Japan, to deliver a decent GDP growth environment and therefore a good environment for corporate earnings growth. And that's looking pretty constructive as of right now.
Jonathan, within the Indian markets, I think financials, consumer discretionary, and parts of healthcare as well as what you liked, I think so. Has anything changed, or are these the top three themes in the Indian markets?
Well, what's exciting about the Indian market is a 6% plus GDP growth environment with a relatively subdued inflation situation, the prospect for the RBI to be able to reduce interest rates at some point in the first half of 2024, a currency that is much more stable than in the past, and a fiscal position that is basically improved. Together with rising inward FDI and portfolio investment, the environment is quite bright for India at this moment. But we are more interested on domestic demand plays, as your question suggested, rather than the exporting part of the Indian market.
Jonathan, some of the other big structural changes which are happening and have been highlighted quite a bit in global media as well, which is India getting a lot of manufacturing setups. I mean, companies committing investments here. Just a quick word on that. I mean, is that going to be the big overarching theme which will play out over the next many years? And are you confident that that will play out?
Yes, we are very confident. We've done a lot of work about what we call the transition to a multipolar world dynamic. And in that multipolar world dynamic, the sheer scale of the Indian economy, its population, and the improvement in infrastructure, so the way that the ports work, the way that the road system has been built out, and many other aspects of infrastructure, that these all speak to the ability of India to take on a bigger role in global manufacturing. And so this inward FDI trend is an exciting part of the overall India story.
All right, Jonathan, thank you very much for joining us. It's a pleasure having you with us here on the program. And, thanks indeed for being here on CNBC TV 18. All right, that's Morgan Stanley's Jonathan Garner with a view. So maybe in the very near term, over July and August, I mean, as Jonathan pointed out, purely on the back of seasonality, things may look a little weakish perhaps. But otherwise, I mean, things have been looking very good. And India, as he pointed out, was slow to start participating, but is now catching up with other markets as well. Rima.